Hello and welcome to Crypto Weeklies. Today in this video we are going to discuss Near protocol, conduct machine learning based price forecast for Near, regression based analysis and accumulation strategy for Near. None of the content is financial advice. The chart or the word cloud that you are seeing on the screen are the popular narratives in the crypto market over the last 7 days. This is calculated by using frequency of narratives being discussed on YouTube and X over the last 7 days. Bitcoin, definitely the biggest narrative discussions around Bitcoin. Bullish sentiment is back. Also, some of the recent narratives related to Ethereum as well as Solana rally and buying related opportunities are being discussed a lot over the last 7 days. You can see the bearish narrative has diminished, but there are some bearish narratives over in the market. Other altcoins such as XRP and Cardano are being discussed. Also, US presidential candidates are being discussed, and altcoins in general are discussed in the market. If you were to look at the news over the last 7 days, most of the last 24 hours, most of the crypto related content is bullish. The overall sentiment score is at around 84. You can check out each of the narrative or each of the news over the last 24 hours using the link on the bottom of your screen, cryptoweeklies.com. All of the content is available on this website. The CryptoTLDR, which was the chart that we just saw, the narrative cloud is over here. Now we'll focus our attention on Near and its price forecast. Right now, the market over the last 24 hours has gone down by about 0.86%. Again, rallied about 5% yesterday. Near has right now flipped the Leo token with a market cap of about $5.5 billion. If we were to look at the tokenomics of Near, the market cap's number 17 by volume, ranked number 24 over the last 1 year or so. If you look at the price growth, has been from less than $1 to about $5, about a 5x growth. Market cap growth again from less than $1 billion to about 5.5 billion, 5.5x growth. That means the growth in market cap is getting reflected in price at slightly diminished value. That means a 5.5x growth in market cap attributes to about 5x growth in price. That means the impact of dilution has been minimal over the last 1 year or so. The circulating supply for Near is at around 1.1 billion token in circulation. It does not have a max supply, not surprising. Most of the layer 1 cryptos don't have a max supply, but a set inflationary mechanism. In terms of the machine learning based price forecast, now that we are looking at the next 6 months, between $4, the base case between $4 and $4.89, kind of where the price action is trading at this point. This is the base case scenario devoid of any bullish or bearish sentiment. The data that we have used for this is since the inception of token at a weekly average price. That data is fed to the machine learning algorithm. The bull case scenario at about 68% confidence, that is, the price is likely to stay below this blue line. Is the confidence level is at around 68%. Between now and December 2024, the price action could see a 2x slightly over a 2x gain between $5.28 to about $13, almost $14 level. To the upside, to the downside, the bear case scenario between $1.68 and about $3.95. If you are interested in week by week forecasts and how those valuations will likely pan out, again, not financial advice, the base case is in the middle. To its left are the three bear cases at around 68%, 95%, and 99.7% confidence. Similarly, to its right are the three bull case scenarios. The key idea with, for example, at 95% confidence level, the price on January 26th, 2025 at $52, the price action has about only 5% chance to be above the $52.66 level. That is, at 95% confidence, the prices are likely to be lower than $52 come January 26th. This is the way to read the chart. If you were to again look at the regression based analysis for near, this is the polynomial regression function wrapped around the weekly price action of the near price since inception. The fair value is the line in pink. To its ceiling are the 3 standard deviation residuals. To its floor are the 3 standard deviation residuals to the downside. The key idea with this analysis is that you see that there are phases of the market where price goes up with time due to the bullish sentiment, as well as phases of the market where price goes down with time. This polynomial regression analysis tries to capture both these phases of the market and establish a relationship of price and time based on this non-linear the cycles of the phases of the market cycle. So for this analysis, if you were to zoom it in, the current price at around $4.94, slightly above the $4.34 level, which is the 2 standard deviation support. You can see that prices briefly in early or mid August corrected beyond the 2 standard deviation floor. Now the key level to watch is to the upside, that is at the $6.82 level, which is the 1 standard deviation floor, and the fair value at around $10.73. And if you were to take a conservative approach to analyzing the peaks for near, so if you were to overlay the past 1 standard deviation performance towards the end of the bull run, you can see over here the prices tend to outperform the 1 standard deviation ceiling. That ceiling at this point for near is at around $16.86, and the 1 standard deviation floor is at around $6.82. So that's the 70% confidence that the prices would likely be in this range. So those are again from the current level at around 3.5x gain if the prices were to reach the 1 standard deviation ceiling. Again, this chart gets updated every single day with more and more data. That ceiling price and the shape of the regression function changes, but that again is not financial advice, and hope you do your own due diligence related to near and their fundamentals as well. The three so now let's move to the 3 accumulation related models. The first is the time weighted average price model, which establishes a cutoff, essentially the time weighted average price being the cutoff above which the token is slightly overvalued, and below which this blue line, that's when the token is undervalued, and a decent time to dollar cost average. Right now, if you were to look at the risk score for this analysis, the risk is at around 0. Today at August 25, the risk is at around 0.07. So again, less than 0.1 risk. And if you were to zoom the current price, the time weighted average price is around $4.65, and the token price is around $4.98. Again, that's why there is a close affinity between the price and the time weighted average price at this point in time. Definitely a decent buy zone. Again, for the DCA model, this is the second model, takes into consideration the relationship between the risk and the current price based on regression and time adjusted regression function. For this model, the current price at around $4.95, this is the best time to dollar cost average. The risk level is less than 1, between 0 and 0.1. You can see the last time we were here was December 2022, when the price was at around $1.26. The third model is the SMA model. The purpose of this analysis is to look at the shorter term risk of buying at the top or towards the beginning phases of the bear market, when the risks go below 0.1. You can see over here, the first time in the last bear market, the risk for near was at 0.1 level at around, when the price was at around $7. Eventually the bottom was less than $1. That means, and you can see the risk level per this analysis was at around 0.4 at that point, because this is calculated using the proportional difference between the 20-week moving average and the price. And what tends to happen during the mania phase, the risk per this analysis goes way up when the price goes too far away from the 20-week moving average. Similarly, during the initial phase of the crash, the risk level goes way down, because the price has gone significantly down compared to the 20-week moving average. This is again just an indicator to look at in terms of whether the prices are too overheated or too undervalued at any point. For this analysis, the risk level is at around 0.36 right now, the fourth best time to dollar cost average near. With this, I would like to conclude the video. Hope you like this content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.